Hello traders, today is June 8th, 2020, 9:20 Eastern Daylight Time when I'm recording this. I want to go over a couple of things today. I want to take a look at a previous trade we made last week, price action analysis on the S&Ps. I want to take a look at a Elliot wave pattern that Bob Kendall released, and an options trade for the coming week. If you're here for just one of these things, I will timestamp it all in the comment section below and in the description below. So looking here, looking at our previous trade, we made 450% based off implied open. I do want to take profits on that. Originally, I was thinking turning it into a calendar spread, turning it into a diagonal spread, a vertical spread. I don't want to do any of that anymore because it's just gone up so quickly. I want to sell those, take profits on those, and then roll it into another trade this week. Looking at the price action on the S&Ps, I think I've been saying this again and again and again. We have a gap, you have a gap, a gap, a gap, a gap, and another gap right here. Because you have so many gaps right here, it's creating a situation where normally what's supposed to happen is that you're supposed to have a fill of these gaps. So it's to come down, fill these gaps, and then bounce higher. It's not filling the gaps though. It keeps on jumping above the gaps, and it keeps on bouncing off the gaps and going higher. This is short-term very bullish, but it is long-term very bearish. And this is the whole when what should happen doesn't happen theme that we've been talking about. So that's the first thing right there. That looks very bullish short-term. Second thing is that we are a bit overbought, so I do think we could get a pullback, but I think this level right here will hold, and it's the last Fibonacci level until we get to all-time highs. And looking over here, there's nothing stopping us. You had a red candle, and a red candle. All of those were trending days, so they didn't create much many demand or supply zones. And then you had a big gap right here, and then a red day and a red day. And those are largely trending days. So I would expect the market to roar higher, probably after a small pullback. How small will the pullback be? Probably just to this 31, 33 spot 42 level right here that I have highlighted. And with this pullback, I think that the ones that will be affected the most are going to be the NASDAQ. So we look at something like NQ. If we can look at the NASDAQ, we start seeing that it's only up 0.17 for the day. But then we look at the RTY, the Russell, we start seeing it's up 1.78. And so what we're able to see is that I would expect going into Monday, Tuesday, so today and tomorrow, that we do get a pullback, but the pullback resonates largely in the tech sector. The pullback resonates in the healthcare sector. If we actually look at healthcare, it's been a lot weaker. If we look at biotech has also been a lot weaker. The reason these are weaker is because people thought these were safe havens in late March because they're worried about coronavirus, so they rushed into biotech, they rushed into healthcare, they rushed into tech, thinking that everybody was going to stay at home. You're now starting to see the sector rotation over the last 2 weeks coming out of there. You're starting to see more people going into the financials, the industrials, which before were weak, the small caps, which used to be weak, but I think they're stronger now, and that this pullback, this overbought pullback back down to this level is going to affect the tech, biotech, and healthcare the most. And I don't think that industrials, financials, or small caps, and probably even mid caps are going to get harmed by the pullback. And I think this pullback is just going to be a quick 1 or 2 day pullback, and then we go higher from there. So that's certainly something that we're looking at right there. I wanted to talk about a Elliott wave analysis that Bob Kendall did. I'm not an Elliott wave expert, so I'm not going to go too much into it, but you see the wave analysis in front of you right here. 1, 2, 3, A, B, C, D, E, and then a 1, 2, 3 pullback, and then all the way right here, that is the final target, a little over 3,400, and then it comes down. Of course, that's right there, a target. I'm not a Elliott wave expert though, so I can't confirm that this is right, but looking at it from a price action perspective, from areas that I do tend to know a bit better, looking at market profile, looking at price action, I do tend to know those things a bit better, and looking at it from that perspective, I do think that this could certainly play out, and I'll keep you updated on what it's going to look like. So going into this week, If we look at the weekly chart, we start to notice that we have gone up with essentially no pullback. We have gone up 1, 2, 3 weeks. I do think this week we go up, but I do think we will probably see a minor pullback throughout that. So what's the trade for the week ahead? The trade for the week ahead is that I want to do a unbalanced butterfly spread, and I'll explain to you why. Long 323 calls, quantity 1. Short 327 calls, quantity 3. Long 329 calls, quantity 2. So why do we want to do this sort of a trade? In this sort of a trade, we're able to be bullish, but if there is a pullback, we don't lose money. So we make money if the market goes up a little bit, but we lose money if it goes up too much. And so this is what the payoff diagram looks like. And this right here would be the market going down. And this right here would be the market going up. And right here, the sweet spot level on SPY is 327. That is our sweet spot. That's where we make the most profits on this trade. So 327. If you guys are going to do this on SPX, you guys certainly can. On SPX, it would be 327.0. Just multiply by 10 because SPX is 10 times larger. But that is a sweet spot for this trade going into next week. And this lets us bet on the market going higher. But if there is a pullback or if the market goes to lower lows, we don't lose anything. In fact, we might make a little bit because you could put this on for a net credit. Other than that, if you guys have any questions, go ahead and ask. We answer all the questions that you guys have. If you guys like this video, just go ahead and tell us by giving us a like on this video. We're on StockTwits, TradingView, and on YouTube. So if you have any questions, you don't just have to put on YouTube. You can go ahead and ask us on StockTwits or on TradingView. Thanks for watching, everybody, and be profitable. Happy trading.